The story here is a US dollar strength story that has come about because, as you say, the Fed messaging has become very strong in the idea that they're not cutting rates for a long time, and indeed there's the risk that they may still hike a little bit more before the end of the year. So that's created a repricing in terms of yields in particular in the US, and that's led a move up in core global yields. But certainly it's lifted the US dollar significantly, and the Aussie dollar has paid the price for that in a sense.
How will ratings agencies be viewing the chaos in the US Congress and the 45-day reprieve on the debt ceiling?
So from a rating agency, it's really about Moody's. Moody's is the last of the big three that still holds a AAA rating for the US. And it has already sort of alluded to the idea that if more sort of uncertainty comes from this shutdown, that they will consider a downgrade. So from a practical perspective, however, a AA plus rating for a sovereign, particularly for the US, doesn't really have major significance for the sovereign or for those invested in treasuries. But it does have sort of yet another reason to lift the concern around the uncertainty that's coming from a political side, and that indeed pushes up yields from a term premium perspective. In other words, there's a higher risk for investing in US treasuries because of the uncertainty coming from the political side.
The new RBA Governor, Michelle Bullock, has been praised for not raising rates this week. But are Australia's lower rates compared to those in the United States actually a problem?
There can be a problem from an inflation perspective, if you like. One of the reasons why inflation comes from the tradable side of things, and a weaker Aussie dollar makes that challenging. Now we have this scenario here where the US is being very adamant that they're holding rates higher for longer, whereas here in Australia, the RBA has been sort of being the reluctant hiker, if you like. They don't want to hike as much. And that differential is having a significant weight on the Aussie dollar, and the expectations for that differential to remain wide or even widen over an extended period of time is a headwind for the Aussie dollar. So for now, and we've got to remember actually that early in the year when the RBA hiked, they talked about inflation, services inflation, high house prices, and the weakness in the Aussie dollar as the reasons why they hiked. And now here we are with the Aussie dollar flirting with a move below 63 cents. So weakness of the Aussie dollar can become problematic.
How significant are the implications of China's property development disaster for Australia's currency?
They're quite significant. I mean, Australia obviously is quite exposed as an economy to the fortunes of China, and at the epicenter at the moment of this uncertainty is what's going on in the property sector. So for one, obviously, if the property sector doesn't deliver a lot of construction, there's the less demand for iron ore. But it's also like that perception of weakness in China typically tends to be the market thinks, well, this is not good news for Australia, and that gets reflected through a weaker Aussie dollar, whilst at the same time a weaker CNY also channels through as a weaker Aussie dollar. So it's part of the ingredients, if you like. We need to see an improvement in China's fortunes for the Aussie dollar to start also heading higher.
You did touch on the recent low point for the Aussie, just under 63 cents US before recovering. How do you see the rest of the year playing out?
We think near term, the Aussie dollar is still susceptible to the downside. We wouldn't be surprised to see, a test below 62 cents coming not only from what's going on in the US and then move up in US Treasury yields, but also because we think that there's still a little bit of more bad news coming, particularly from the property sector in China. So near term, there's downside risk. But as we head towards the end of the year, we still think that, for one, the inflation story in the US and the decline in activity that we expect in the US will allow the Fed to change its rhetoric, so move away from that hawkish messaging, and that will start weighing on the US dollar, lifting the Aussie dollar, whilst at the same time we also expect improvements in China's economy, which again will be positive for the Aussie.
Rodrigo Catril, thank you.
Pleasure.